All right, good. So today we're going to be talking about support and resistance, how to find them in the chart. Because like I said, if you want to trade, you have to know what support and resistance is. And those two levels allow you to be able to trade the market. It makes you understand where to look for a buy, where to look for a sell. But you don't have to be limited to that, because once you get used to the market, like if you look at the markets I trade, I don't even have support and resistance, because I trade what I call price action. That's because I've been, doing this for a while and perfecting what I do. But for starters, I will always say that you use support and resistance. A lot of people, even some pros, everybody still use support and resistance. They have to mark it up on their chart and stuff like that. So TradingView is the website I'm using. If you have TradingView, you can check it out. It's a website. It's not free, but it's free for you to start using. Whenever you feel comfortable to go into it, then you can begin to pay for the subscription. But for now, it's free. You can do the free version. But don't worry about it yet, because I want to show you how to go into your charts, how to mark up your support, your resistance. And then we're going to be talking about trend lines and price actions, because all those things are the things you need to be able to go into the market and then be able to analyze the market and know where the market is going. Because if you don't know those things, then you're going to be gambling. That's why a lot of people say Forex is gambling. It's because they don't understand the technical analysis behind Forex trading. For you to be able to trade Forex properly and be profitable, you must understand that this technical analysis in Forex, they are mandatory. Everybody needs them. Everybody needs them. So that's what we're going to be talking about today. Now, I have my chart. If you look over here, it says D, that is day. When I click on it, you know what? 1 second, 5 seconds, 15 seconds, 30 seconds, 1 minute, 3 minutes, 5 minutes, 15 minutes, all the way down. And then if you screw up, see, I have 1 day, 4 hours, 1 day, 1 week. I have it at 1 day right now. Okay, I think we have somebody else in the meeting. Let me see. Okay. All right, somebody just joined. I don't know who that person is. He only says iPhone. So if you just join and you have your audio, just let me know who you are, because it says iPhone. I don't know who the person is. Okay. All right. Now, when you come in your chart, like I said, when you come in your chart, you open your chart up. This is Euro USD. Now you can choose whatever you want. Let's say, okay, I'm going to unmute you guys because I want to hear you guys answer me a little bit. Let me unmute. Let me see. Probably maybe Roger, because he's been the most consistent one here. And okay, Roger, give me an example of a major pair.
Would be either Euro USD or Canadian USD.
Okay.
Canadian
all right, let's go to CAD. CAD USD. All right. So I'm going to choose this one. Bam. This is the chart.
CAD USD.
Okay. Now I'm on a daily time frame. I cannot just get into this market and just begin to sell or begin to buy without me knowing what the market is doing. But me looking at a chart like this right now, with what is in front of me, I know this market is bullish, because this is where we are right now as of today. Right here. So let me change this thing so you can see my arrow. This is where we are as of today, right here. Okay. So the market definitely started from here, and guess what? It's definitely bullish because it's going up. If you look at it from here, look at that. This market is going up. So I know this is a bullish market. Okay. Right. So what am I going to be trying to do? What am I going to try to do in this market? What do you think I'm going to try to do in this market?
Draw a trend line.
All right.
Well,
hey, Michael, you're welcome.
Yeah,
so, and whose iPhone here? I don't know whose iPhone. The person is iPhone here. I don't know. who that is, so the person got identified.
Oh,
Now, this is a bullish market. When I open this market, what I'm looking for, it's a buy opportunity because it's going up and the market is not looking like it's going to come down. Now, this is on a daily time frame. In case you don't understand what that is, if I count the number of pips that this market has risen to from here, that's 1,000, almost 1,200 pips. Now, that's a lot of pips. You know, if you trade major currencies, that's a lot of pips. Because with this right here, this started March 2020, March 26th of last year, which is a lot. I mean, that's like a whole year. People do that. That's called swing trade. Some people can enter one trade, look for a perfect opportunity, and then they enter at that particular point, and then they just let the market go. For a whole year, this is what they do. All they got to do is every month, they might go in there and then take out some positions, like maybe take $10,000 out or take $5,000 out every month and let the market keep running until the market is tired of running upward. This market has been bullish. Canadian dollar USD has been bullish for 1 year now. Since March 2020, it's been bullish. So whoever entered this market at the right point when the market reversed over here, right here, let me mark it out. This place, can you guys see this cycle that I just made? This was the entry point of this bullish market because it was bearish or from here coming down, but when it got here, the market reversed. This is on a daily time frame. This is a perfect reversal right here. When you see this candle, bam, you know that this is a perfect reversal. And then it went up, retested, bam, started going up. People that have been in this market, if you bought it, let's say you bought it at one standard lot. Where's my calculator? Give me a minute. If you bought that market at one standard lot, which is like $10 multiplied by 1,200. Okay, which is not much because that's $12,000, which is like minimum. But if you want to really buy this market, let's say you throw in like about 10 lot size on it. So 1,200 times 100. Bam. Which anybody can buy if you have like, let's say, maybe $5,000 in your account. By now, you'll be in profit of $120,000, which, you know, is decent. I mean, it's not all of that, but it's decent. Okay, so like I said, we're going to be mapping out support and resistance so that way you know what you're looking for when you go into your chart. Because with that, then you can begin to know where to buy, where to sell, where to take profits and stuff like that, or where to get out of the market and all those things. So I'm going to take out this bullish line. I only put that line to let you guys know that if I open this market, I wanted to trade it, I know that it's bullish. I don't need support and resistance. I'm just going to go in there and look for a buy opportunity and continue buying through. But support and resistance is important because this could be the end of this whole trend. That, you know, it could be the end of it. I don't know, but let's put our support and resistance now. So this is what I'm going to do. So this is on a daily, we're on a daily time frame now. You don't want to trade on a daily time frame until you know what you're doing. I would say trade on a lower time frame, like probably maybe 4 hours, 1 hour, 30 minutes, you know. But as you get better, you realize that it's best for you to trade on a daily time frame or weekly time frame. Then you can take a swing trade. You can have one trade for a whole month, just one trade. You don't have to go in the market every time. But as you're learning right now, I would recommend you going to the market a lot because then you get familiarized with the market structure, the way the things move and everything. You understand, you know, how to place trades and all that. So I'm going to change it. Now I'm going to go from daily to monthly because I'm trying to get support and resistance. Now, if you look at this market this is monthly time frame. So this was in 1992. I believe some people were not born then. 1992. Let me get my, let me change it. Okay, look at this. So this market started in 1991. That's how many years ago now? 30 years ago. So trading has been there for a long time. There's nobody that's going to come into trading and be like, you know what? Oh, this market might go away tomorrow. No, they've been trading since way, way before most of us were born. And it's always going to be there because it's the world market. It's the biggest market in the world. So, but they did digitalize this back in 1992 and then put it up here. So this is a monthly time frame. And if you look at it on a monthly time frame, you will see that the market started from here, then was bearish, came all the way down, all the way down, all the way down here, then went back up, started being bullish again in 2006, 2005, all the way to 2007. It went all the way up here, came back down, went back up, came back down, and now the market looks like it's consolidating on a monthly time frame over here. It looks like it's consolidating over here. If you look at this, let me mark this out in a minute. If you look at this whole place here, it looks like compared to the whole of this part from 2014 to 2020, this market has been in this position for 6 years. 6 years. Let me see if there's anybody waiting to join. Okay, I think we're all good. Now, for 6 years, this is what the market have been doing. That means if I want to trade this market, you see, that's why I told you when we looked at it initially, I said that trend we saw could have been the end of it. The trend could have been the end of it, and which it is, because from here, the market came all the way down, went up, came down, went up, was reversed. Look at this candle. It was reversed over here. Then tried to go through, came back down, and now it's up here again. So this is very delicate. You don't want to buy over here like this. You want to see what the market is going to do with this box. Is the market going to come out of this box? That's if you want to swing trade for a year. Is it going to come out of it and continue up? Or is the market going to break back down and go back all the way here? Or is it going to continue from here, break out of the box, and then continue all the way up? If from here to here, let me show you how many pips it is. It looks small, but it's a lot. See that? That's what we just calculated. That can make somebody a lot of money if you know what you're doing. So what I'm going to do now, when I first open the chart, I am going to look for my support and my resistance. And looking at this chart, my first support is going to be right here. Let me grab it. Horizontal line. Right here, right about here. Bam. I'm going to make that bigger. Okay. Right here. You guys see that line that I just put? This long line. That is my first support. Why did I say it's a support? You see, price started from here. The price started falling down. It was bearish, coming down. And then the price got to this line. And what did it do? It started going back up and tried to go up. Then it came down again, bounced around it, came back down, came back to it, and then fell below it. And then came back to it again, went back down, came back to it, broke through, went up all the way, came down, went up again. Now it came back down. And guess what? It got back to that same line and tried to go back up, but it couldn't. It came back down, tried to go up, came back down to that line again, and now it's going up. So this line right here is my major support, and we're on the monthly time frame. So this is a very major support. So let me mark it out. So I put that line, then I'm going to put this box. That's the way I just like to do it. I learned it from somebody too. I'm going to put like that. Good. So this is my major monthly support line. Now, what about the resistance? When this price started going back up, it was tough for it to cross certain places. Over here, right here, it's a great one for me. So I can put another one here, bam, and then I'll put another one over here. Okay, so this one is more important than the top one. All right, good. Thank you, sweet Lord. Now, these are my monthly supports and resistance. This first one, second one, third one. And if I want to stress it much, I can still put one at the bottom, right here, right there. Okay, so we have 4 of them. And then this is very far away. The price might not get there for the next 10 years. I don't know, but let me just, for the sake of teaching, I might just put it right here. Now we have 1, 2, 3, 4, 5. Okay, that's Toby. Toby, welcome. Now that's 5. 1, 2, 3, 4, 5. I have the first support then this one became a resistance, and then it became a support, and then this was a resistance that became a support right here, and then this was a resistance, became a support right here, and this now is the major resistance, and the price hasn't broken it to make it a support. So this is your CAD USD for the whole of 30 years. This is 30 years we have in front of us. But you cannot trade like this except you are a professional trader. You can't trade on monthly time frame. No, you're going to be stuck for a long period. You might even, it might be too much. So I'm going to go down to weekly time frame. You see that? When I break it down to weekly time frame, it's more open now. Now on my weekly time frame, remember we are here right now. This is where we are. This is where price is right now. This is where price is right now. And I told you this thing is bullish. So what I'm going to do now is this. I don't really have much to do on the weekly time frame because I have my monthly marked out perfectly well. My monthly support and resistance are properly marked out. So I don't really have to do much here. So, but I'm going to go to daily time frame. Good. Now, see the daily time frame? Let me expand my screen and show you guys very well. Okay. See? This is my daily time frame. I can trade with this. So price left this support. Price is heading where? It's heading to this resistance. So price left this support and price is going up and it might probably get here. Now price is actually right here. We have, let me see. We still have, if it goes all the way up, that's about 400 pips, and that's a lot. From here, this is a daily time frame. Okay. So this market right now, I would say the market is bullish. If you look at it, it started from here and it's going up. So you don't want to sell in this market because if you try to sell, you're going to lose money. This is a bullish market. Right now, the market is what? Is bullish. Okay. Right there. This is a what? A bullish market. This is a bullish market. So price is going from here all the way up. And it's going to probably get here. Now, what I want to do, I'm going to look for a good reversal like this now. If you just join, please mute your, so we thunderstorm in Dallas. Wow. Dallas is becoming too much now. Winter storm, thunderstorm. God help us in Dallas in the name of Jesus. Amen. Storm, in the name of Jesus, I ask you to be calm. Mahando Bahate Librahaski de Bashta. In Jesus' name. All right. Now, if I want to trade this market, all I have to do, I want price to come down a little bit more. When it gets close to this line, this trend line, I'm going to buy up. I'm going to buy, not sell, because the market is bullish. I just need it to come down all the way. It's coming down. It's going to probably get close to this line. When it gets there, I'm going to buy all the way up. And then you make money in the market. Let me go back to the weekly so that we can see what we're doing. If you just join in, I'm just teaching you guys how to mark your support and your resistance. This is on TradingView. TradingView is a website that allows you to see the market live and gives you a lot of tools to use in TradingView. As we go, I'm going to teach you guys how to get the tools and what they are meant for. But the basic right now, I'm just using the lines to mark out our support and resistance so that we know where to buy, where to sell, how to enter the market, and to know what the market is doing. That's why I say let's join early, guys. I don't want to go through everything I've said again. Now, from weekly, I'm going to change it back to daily. So I said this market is what? Bullish. Okay. Who can tell me what this other market is over here? If I come here, this market right here, if you know what it is, unmute your microphone and tell me what it is. From here all the way down here, who can tell me what the market is? I can't hear anybody.
It's
Is
bearish.
this market bullish?
Bearish.
All right. So Christiana, I believe, who's that?
It's me. I'm using my sister's Zoom ID. It's Toby.
Okay. All right, good.
Bearish.
So that's a bearish market. Thank you, Toby. So this market is bearish. Now, in a bearish market, what are we supposed to do? Are we supposed to be buying or selling?
Selling.
Supposed to sell it.
Good. So you look for sell opportunity in the bearish market because the market is going down. You can see that. Now, this is what I call trend line. You see this line I just put here? This red line? I call it trend line. Now, if you look at it, when the market started coming down, the market decided to go up and touch this line. The moment I saw the market touch this line and started coming back down, I'm going to put my trend all the way through. Because that tells me that the market, every time it comes down, it goes back up, touches this line, it has a high potential of going back down. Look at that. The next time it came back up, it touched this line. What did it do? Went all the way back down again. Bam, all the way down. And then when it went back up, touched the line, it started coming down again. And then went back and then broke through. The moment the market broke through this thing, came back down and retested it. At that point, you know that the market is no longer, at that point, you serious? You just know that the market is no longer bearish. The market now is now bullish. So I'm not going to be looking for sell opportunity anymore after here. I'll be looking for what? Buy opportunity. Because it broke my trend line. So the trend line helps you to keep your market in the flow. It lets you know when the market is still in the flow. Trend line, you can write that down. Trend lines help you to know when your market is in the flow. That's it. Trend lines let you know when your market is in the flow. So with trend lines, you can tell where your market is going. This is a bearish market. I'm looking for sell opportunities. With my trend line, I know that this flow of this market is bearish. So if I want to sell, I wait for the market to get up here and I sell down. Okay, this right here is a perfect sell opportunity, but you would have lost money there because the market broke after that. Right here, this right here. When the market came here, it's trying to, do the same thing it's done ever since. But what did it do? It came back down. Let me see how many pips. Came back like literally 100 and something pips, which is a lot because this is like 1, 2, 3, 4, 5, 6, 7 days. This is 1 week of trading. It looks small to you guys, but I know what I'm telling you. When you go to 15 minutes time frame, on a lower time frame, because right now we're on a daily time frame. When you go to 15 minutes, 4 hours, this is a lot. This is like 7 days of trading, 185 pips. And then the market decided to go back up and then hit a stop loss and became bullish. So that would have been probably a lost market. Depends on, but you can come out of it when you see that it's not going anymore. Once you start consolidating like this and then go back up, come out to take a profit, So this is a bearish market. Okay, what about this market? Who can tell me what this market is? This market, who can tell me what this is? I think Roger's mic is trying to talk, but his microphone is not, I can't hear him. Who can tell me what this market is? This market, Toby, are you there? Anybody?
It's a ranging market.
It's a ranging market.
Yeah.
Roger, what do you say?
Hello?
Yeah, I can hear you.
Hello?
We can hear you.
Oh, okay. Okay. For me, it looks like a ranging market.
Okay. You said ranging. Toby said ranging.
Market.
Who else is there? Micah. Remember, how many kind of markets I told you guys we have? It's either market structure, it's either it's bullish,
yeah,
or it's what?
Bearish.
It's consolidating and ranging.
Consolidation.
Or ranging. These are the 4 things that market will do. It's either that or the last thing you can is what?
Closed.
Yeah, these are the 4 things that market we can do. It's either it's bullish, bearish, it's consolidating, or it's ranging. If it's not doing any of this, market is closed for that day. And market don't usually close. The only time market close is on Friday. Friday, 4:30 New York time, the market will be closed. Every pairs will be closed apart from cryptocurrency. Cryptocurrency doesn't close, it's 24 hours, 7 days a week, all year round. But every other market, they close. They close when New York closes at 4:30 on Friday and then open on Sunday evening at 5 o'clock. So it's either your market is bullish, bearish, consolidating, or ranging. Now, to me, this market, it's a little bit consolidating, not even ranging. Because for the market to range, the market has to do this. It has to go from this resistance, this box I put now is my support and resistance, to this support, from this support back to this resistance, from this resistance back to the support, like that. It needs to keep on doing this for me to call it a ranging market. Do you guys get that?
Yeah.
Now you see, because it's not going from here all the way down. Though it's not doing this, it's not ranging to me. So this market to me is consolidating, but we're on a very higher time frame. We're on a daily time frame. That's very high. Now, if I go to my 4 hours, you will see this whole market now. You will see this whole thing. Let me look for it. Look at it. On a 4-hour time frame, this is the market on a 4-hour time frame. Look at all these candles in there. But on a daily time frame is ranging. It's a very, very choppy market to trade. Very, very dangerous. But if you're trading 4 hours, that's risky. But if I take it to a lower time frame, if I go to 1 hour, I don't know if we can find it. It's all the way back. Because when you start going down to lower time frames, you understand that the market is really, really big. So what you see on a 3 hours. Where is it? Okay, right there. This is the market in 3 hours. And let me just, this is in that box we're looking at. Let me just calculate this pips. Halfway through, that's 200 and something pips. If you decide to trade this market from this support halfway through, not even all the way to the end of not even up to the end of it, halfway through like this right here, good. Let's say you bought from the bottom here and then you take your profit halfway through, which is right here, right here. That's let me see the number of pips. That's 41 pips. That's 241 pips. 241 pips. Let me tell you how much that would be. If you bought it for, let's say you bought it for just 2 lot size. Okay, you would have made $4,500 and something dollars. Sorry, $4,800 and something dollars. From here to right here. From here to right here. And that, let me see how long that took. Okay, that took 11 days. But you can increase your lot size. If you increase your lot size to, like, let's say, if you can afford to do like 5 lot size, that's 240 multiplied by 50. That's $12,000. You'd have made $12,000, but you need to have a decent account to be able to afford that, But that's just to give you guys an idea of what we're looking at. We were looking at this whole thing in a daily time frame, that ranging market that you guys called ranging, that I said is consolidating this whole thing. And it doesn't look like much, but when you go down to a lower time frame, that's a lot of stuff you can do in there, a lot of stuff. So marking out your support and your resistance is going to help you a lot to understand the market. You're going to know the market structure, the market environment. What is the market doing? Is the market bullish? Is it bearish? Is it ranging or consolidating? Your support and your resistance will let you know the locations where to buy and where to sell. So let me take out all those things. So what I encourage you to do, go on your computer when you're free, go to tradingview.com and try to test the market out to see how to mark support and resistance. And then if you do, take a picture of it, a screenshot, send it to me, and I will grade it and let you know if you do it properly, if you didn't do it properly. because that's the only way to do it. You got to go into the market for yourself. You know, you just go up. I've downloaded this video. I recorded it so that way I can send it to you guys and you can watch it again and know how it goes. So that you can go ahead and do it multiple times and get better at it. Let's see.
Yeah, that's this video on the group chat.
Yeah, I'm gonna upload it when we're done. I'll put it on my YouTube so you can watch it.
Okay.
So now I'm gonna ask you guys some questions, and with that will be good for today. And by the way, have you guys been trying to take a trade on MT4 since we downloaded it? Has anybody ever tried?
I tried to, you know, the first time we did it on the last class, you know, instantly I lost like almost like $7,000. So
Good. Now, why did you lose?
Ever since then, it's because of the lot size. The lot size. I think my lot size was like 1.0 or something. So that was why I lost a lot of money.
That's why you lost a lot of money.
So ever since then, I just wanted to like just chill. I was just, you know, I'm looking at it, but I didn't actually make no trade or anything. I wanted to like understand. I wanted this class to come on so I can like do something, you know, be able to take a trade next time.
All right. Okay, Toby. Thank you. Now let me open a new market. This is a Australian dollar USD. Now I want to write something. That's why I opened it. So Toby lost a lot of money for something very important, which every trader has to know. It's a class we're going to take. Okay. What did I just write there?
Risk management.
Now, this is very, very important. Where's this thing going? Come on, right there. This is very, very important. Very, very important. Let me make it bold as a matter of fact. Very, very what?
Important.
Because if you don't know how to manage your risk in the market, you will blow money up. So this is a class on its own. And what does it contain? Things like what is that? What did I just write there, guys? Hello? Is anybody seeing that?
Yeah. Lot size.
Okay. What is number 2?
Stop loss. Take profit.
And what is number 4?
Entry.
Now, if I remember anyone, I'm going to let you guys know. But for now, these 4 things, when it comes to risk management, these 4 things are very, very important. And yeah, just remember something else. Yeah, good. And what is number 5?
Account balance.
Account balance. Now, these 4 things are very important when it comes to the market. When it comes to risk management, you want to understand this, at least 5 of them. Account balance is basically what you have left in your account. Whatever your account balance is, determine the lot size you can have. So your account balance determines the lot size you can have. Okay? Now, your stop loss. What is your stop loss? You want to trade with stop loss. Don't ever take a trade without stop loss. Because stop loss is a place whereby you want the market to take you out of it and protect your account just in case it doesn't go your direction. Okay, let's go back to this market. Remember we marked out the, is it this one we marked out? Euro USD?
I think
Oh, I
this
didn't
is a
save
new one.
that stuff. Are you kidding me? No, that was, I didn't add it. Oh, I think I marked out the Canadian CAD USD. Man, I should have. Okay, right here, good. Now, this is the CAD USD. Okay, like I told you guys, this market is bullish and it's going up here. If I decide to say I want to enter a trade, I place a buy trade in this market. Then my goal is to take profit over here at this top. You see, can you guys see this green and red?
Yeah.
Now, because it's a buy trade, the green is on top, the red is at the bottom. So the green is where I want the market to go. That's why this arrow is up here. I want the market to go. So the market is right here now. So I want the market to go from here. I want it to go up and get here so I can make money. I can make all this money here. At the same time, you guys see the red at the bottom? This red, I don't want the market to come down like that. I don't want that because this is a buy trade. This is a buy trade. The market is bullish. I'm buying. So if I buy and the market goes all the way to the top here, I'm going to make some money. But if I sell and the market comes all the way down here, I'm going to lose. Now let's assume that my account balance is $100,000. Now let's assume my account balance is how much?
$100,000.
$100,000. And if I enter this trade and my account balance is $100,000, if I don't put a take profit, which is up here, take profit, or a stop loss, which is down here, this market, if it doesn't go up and it starts to go down, every time it's going down, if I enter this market with a lot size of, if I have $100,000 for me, because I know how to trade, I'm going to go in with, let's just assume, which is really huge. Don't do it, guys. 15, a lot size of 15. 15 standard lot, that's huge. That's really, really huge. I'm not going to put my stop loss here because I'm entering with a very huge lot size. That's what we call, as we'll learn, you're going to learn what they call sniper entry. I know it's a lot for one class, but don't worry. We are doing crash courses. You're going to learn what they call sniper entries. Very important. With sniper entry, I don't want to lose much. I want to enter at the right place where I know that the market is not going to retrace that much. And then I'm going to move my stop loss up like that. So that way, you see that now, my stop loss compared to my take profit, it's huge difference. The red is very little. The green is really big compared to that. So my risk to reward, it's something I can take because the risk is just like 1 of 5. You see that? So my reward is 5 times greater than my risk. So I can take that. So we're talking about risk management right here. I said risk management has to do with lot size, your stop loss, your take profit, your entry, account balance. Let's go back to that market. Okay, back to this our trade, this market now. If for any reason the market did not go as I intended to go, I said it's bullish. The trend tells me it's bullish. It's going from this support, it's going to this resistance over here. So I decided to buy from here because this is where I met the market, and I want to make all this money that is left at least. But if I go in without stop loss, and my account balance is $100,000, and I buy with a lot size of 15, but the market, instead of going up this way, the market decided to go up a little bit, and then I see my money increasing from $100,000 to like $110,000. I'm like, oh, I'm happy. Oh, it's going. But the market decided to make a U-turn and say, you know what? I ain't going up no more. I decided to go back down. If the market starts going down, my money from $110 will start reducing to $105,000, to $100,000, to $90,000, to $80,000. And then when it gets here, because I was ready to lose maybe $20,000, when it gets here, it's going to take me out of the market. I'm going to have a loss of only $20,000. Depends on the size of this, stop loss. But without my stop loss, this market will keep going down if you don't have a stop loss. Now it's no longer $80,000. It's going to go to $70,000, $50,000, $40,000, $30,000, $20,000, at which point most brokers will just close your market and take you out by themselves because you have lost too much money now. And then you wake up one day, open your account that was $100,000 is no longer $100,000. Your account is now barely, let's just say, your account is now what? Anybody there?
Yes, is that it's $15,000?
$15,000.
Mm-hmm.
Your account is now $15,000 from $100,000. Why? Because your risk management was poor. You didn't have no risk management. Remember, we're talking about risk management, yo. We're talking about this risk management. So because you did not maintain proper risk management, you just blew $100,000 account to $15,000. That can make some people sick. So you have to learn. This class is very important. The next time we're going to be coming on, I'm going to be teaching you guys about risk management. And, so that way you don't blow up your accounts. It's very important, very, very important. This is what drives a lot of people from trading Forex. When they start blowing up account because they haven't learned risk management. It's one of the most important classes in Forex. It's not just going there to place a trade, but how to manage your risks, your losses, and your gains. So write that down, risk management. If you want to screenshot this, you can screenshot it. You can write it down. That's what we're going to be discussing next. Our next class is going to be focused on risk management. We're going to focus on that. It's very important. We all learn it. So you can screenshot that right now or write it down. All right, guys, we have come to the end of today's class, and we are going to be doing another class. And since it's going to be online, we're going to have multiple classes in a week, so that way we can learn faster. So, my people, God bless you guys. I pray for you guys to be successful in the name of Jesus. I pray that your understanding is sharpened and that you comprehend this market quickly and that you're profitable in Jesus' name. Amen. God bless you all, man. Thanks for joining. And like I said, I recorded it. I'm going to upload it. When it's ready, I will let you know. And you can go and watch it again and again. And then go on TradingView. It's called TradingView. Let me type it down so that you see it. It's called TradingView, tradingview.com. There's a lot of sites you can use, but this is the best one for me, so I'm being biased here. It's working for me, so it can work for you too. Tradingview.com. Go on this website called TradingView. Right there. Okay. Go right there and you can do most of these things I'm doing here on that website. This thing is not acting up. Ready to close. Tradingview.com. Go there, and then you should be able to look at markets. Try to draw your support and your resistance. That's your assignment, guys. Please send it to me. I would like to have it by tomorrow night. Or let me give you guys, no, tomorrow night. This is what I want you to do. This is your assignment. I want you to open up a market, choose a market and open them up, open up a market. A major market. It got to be a major market. So if you send me something that's not major, I know you're not be following the class. Open up a major market and then mark your support and resistance. Supports and resistances. Let me just put it right. Resistances, okay. And I want to see one trend line. No, let me say two trend lines. One bullish, and one bearish trend line. Okay, this is all I want you guys to do. This is your assignment. Open up a major market, mark your support and resistance, and then also mark one bullish and one bearish trend line. When you're done, I want it to be on the weekly time frame. On a weekly time frame. Okay, so I want it to be on a weekly time frame. So that is your assignment, guys. When you're done, it's gonna look, it should look like what I just showed you guys here. When you were done, yours should look like this. It should look like this. This is what I want to see. It should look like this. So this is what I did. So let me remove drawings. Oh, so I can put it back. Okay, so yours should look like this, but without all these writings on it. So I have my support and resistance, my support, resistance, support, resistance, support, resistance, 1, 2, 3, 4, 5. Yours should not have more than 5 on it. Don't put more than 5. I don't want it to be scattered like everywhere, looking like a barbed wire or nets. So, and then I have 2 trend lines. I have this bearish trend line and I have this bullish trend line. So when you go into TradingView, you will see all these things on the left, and that's how to find your trend lines. Trend line is right there. It's going to say trend line. You will see trend, like, stuff like this arrow. See trend line. You can use the trend line. See horizontal line. That's what we used to make a support and resistance. You know, everything is on there. It's for free, at least for free for now. You know, so it's very, very important. So that is your assignment, guys. Do that, and then we should be good.
When you say, sorry, Apostle, can
Yes,
you hear
sir.
me? When you say the weekly time frame, but all I see on the time frame is just like days and month.
No, click on it. When you click on it, look at, can you see
Oh,
what
okay.
I'm to your left hand side
Yeah,
at the
yeah,
top
yeah.
right here? When you
Yeah.
click on that, it's going to drop down. You see, there's 1 second. You can't use all this one because you got to pay for this.
Okay.
But you can use the higher one, I believe, for free. So there's 5 minutes, 15 minutes, 30 minutes for the 5 minutes. But let your assignment be done on a weekly time frame.
Okay.
Yeah, let it be done on a weekly time frame. Okay.
Okay.
All right, guys. And when the time comes, before then, I might probably give you guys, when you guys start trading a little bit, I might start giving you guys some free signals you can use to make some small money in your pocket before, you know, it's just signal, but you got to have some money in your account, but we're not there yet at all. So don't open a re-account yet because you might lose your money. So, all right. All right, everybody. Thank you all so much for joining again. God bless you guys and have a wonderful, wonderful day.
Yeah, you too. Thank you.
Thank you, Apostle.
I
Thank you.
appreciate you all, man. God bless
God
you.
bless you.
All right.